Um, for founders, while we're waiting for others to join, if you can give us if you're up for a 30-second intro, just to give Kristin a little bit of background on who's here. I think she's aware of a lot of you, but Luke, you're on first. Do you want to give a quick 30-second pitch?
Sure, happy to do that, Mick. Yeah, look, we're Clean and Recover, and we're focused on cleaning up acid mine drainage, which is polluted water that comes from mine sites as part of mining and or other processes on mine sites. That's
Great,
all.
nice to meet you. And you didn't realize you were going to have to talk.
Exactly. It's always
Sure.
two-way. Always be prepared. Dan, DNA Energy.
Hey, meeting Kristin tomorrow, so pretty
Yes,
mandatory
good Dan.
attendance for me today here. DNA Energy, we turn behind the meter assets like aircon, refrigeration, and batteries into digital nodes.
Fantastic.
Excellent. Ishan.
G'day, Sean from Regenex. We're an investment platform that makes it easy to invest in clean energy infrastructure projects, mainly solar projects. We digitize those projects. Thank you.
Great, nice to meet you.
Thanks, Ishan. Julian, do you want to give us a 30-second pitch?
Yeah, hi, Kristin, Mick, and
Hey,
everyone.
Julie.
Hi, we are Solstice AI. We use AI for solar energy forecasting. We help solar farms increase their profitability, and we help energy traders and market and network operators deal with solar variability.
Great.
Thank you. Who we got? Juka, you up for a quick pitch? You might have been in next. It's okay if you're not.
Can you hear me, guys?
Got you.
Yeah.
Yep.
Yep.
Hello. Yeah. So, sorry. I'm sorry. I'm in a car. So just quickly, I'm a founder of the Ready Steady Plug. We provide the EV charging solution for strata buildings or any other kind of big off-street buildings. And yeah, our solution works on the kind of level one solution, which is the on a normal GPO, but kind of provides the fully automatic all the features of the level two, including the automatic billing and the dynamic load balancing and all that kind of stuff. And yeah, that's our turf.
What was the name of the firm again?
Ready Steady Plug.
Okay, ready, set, go. Okay, got it. I think Bernard, you're up next.
Hi everyone, I'm Bernie. I'm based in WA. Company's called TouchGrid. We've developed a little product called Shower Star, which is sorry, can't really see it.
It's in the blurry bit. You got to put in the
Yeah.
blurry.
There we go.
It's IP protected. It's can't show it on TV.
And it's a behavioral change product. It clips onto showers and it gets people to take shorter showers. So
Oh, nice.
big issues with water conservation in Australia, and hot water is the largest residential emitter of carbon emissions. So a lot of embodied energy in hot water. So yeah, we're rolling it out with utilities here in Australia and in North America currently.
That's great. Thanks, Benny.
Great.
Jeff.
Good afternoon, everyone. Hi, Kristin. We have spoken before.
Yes,
I'm Jeff
hi.
Andrews, co-founder of Capricorn Power, and we solve the world's biggest climate action problem. How do you generate renewable electricity 24 hours a day at a lower price than the grid?
Great, nice to see you.
Making progress.
Thanks, Mick.
No problems. Okay, so we've got a lot of energy companies here, Kristin, some showers, some investment platforms, some EV chargers, got a nice range. Invited you on. Obviously, it's fantastic to see Virescent growing strength to strength. Would love to just hear the intro in the background, and then we'll invite everyone to jump in for some questions. But yeah, give us a quick intro, your pitch, and then we can dive in.
Fantastic. Well, thanks very much, Mick. Yeah, it's great to be here. So yeah, maybe I'll just I'm always super keen for it to be as interactive as it can be. So maybe I'll quickly introduce myself. So Kristin Vaughan, one of the three partners at Virescent Ventures. Virescent is the largest energy transition and climate tech VC in Australia. Certainly regionally, not sure how regional. But we manage a little bit over 500 million across 2 climate tech funds. So the 3 partners, so myself, Ben Gus down in Melbourne and Blair Pritchard in Sydney, we started working together about a bit over 7 years ago at the Clean Energy Finance Corporation, the world's biggest green bank. And we were recruited to build out their venture portfolio. And then about 3 years ago, we spun out with the blessing and the support of the CFC to create a new venture manager called Virescent, which means turning green. And that was, for people who do know a little bit about the CFC, a big part of their mandate is to obviously deploy capital, reduce emissions, and then bring in other forms of capital alongside their own, which was really what we were trying to do by creating Virescent. And we now manage that. As I said, we have 2 funds that we manage a fund on behalf of the CFC, and now we manage a second fund as well, which the CFC is a third of the capital in, and 2/3 comes from non-CFC capital. So with investors such as Westpac, QIC, another large institution we haven't announced yet, and then a whole lot of really large family offices and high net worths. But we invest across the economy, primarily with an emissions reduction angle. That's how we think about climate, primarily to reduce emissions, but also to build out climate resilience. And we have 11 people spread fairly evenly across Sydney and Melbourne. And really work with. We've signed off on 3 investments now out of the new fund. One of those has been announced into a business called Quetta out of New Zealand. But across the portfolio, we manage 38 investments, about 280 million deployed so far, and really very much in deployment mode. We really bring, as I said, team of 11. Really experienced. So myself, I've got a chemical engineering degree background in kind of growth capital and venture investing for the last coming up to 20 years. Ben has come out of a venture, a really strong biotech venture background, and Blair has worked across all different types of capital, focused for the last 15 years or so, predominantly on climate. So bringing a really kind of different set of skills, but 100% focused on climate, and really leveraging those relationships through the CFC, through Arena, and through Corporate Australia to really help grow the companies that we're invested in. So I might just pause there, Mick, and take it from there.
Thanks, Kristin. That's great. Again, really good to hear that quick background. Just a quick one for me. I think a lot of the founders here would know about VC structure, but is it a 10-year fund, and does that tell us about the life cycle of how that works and what that means for the next few years?
Yeah, sure. So yes, we are investing. The second fund is a 10-year closed-end fund with optional extensions. We generally build in from day one. You have at least a couple of extensions that the investors can ultimately vote on as you get to that point. So we would expect it to be 10 plus a little bit. And yes, we're very much focused on the first 3 to 5 years is very much around setting the portfolio, and that is making the first investment into the companies that will form part of this portfolio. And then from that period on, it's managing follow-ons and then ultimately exits in the portfolio.
Yeah, I think it's a key one for everyone to know is that despite her incredibly wonderful career, Kristin herself doesn't have $1 billion to invest.
No,
she's investing other people's money, and I think it's important to know that that's you're performing a service, right? You're finding great companies to invest in to provide returns for investors, and understanding that venture life cycle is really important. I always like to tell founders that investors spend about a third of their time working with existing founders, a third of the time looking for new founders, and a third of the time managing their own investors. So it's fairly similar to a CEO, actually.
I think so. I think we very much kind of do go through a very similar process, out there talking to investors and really, and as you say, Mick, really looking to convince them to invest into this asset class. I think we were really pleased. I think it is a pretty big milestone for Australian climate. I think for Climate Tech VC to be able to raise this third-party capital, and we're incredibly focused now on making sure it's really successful, and we just keep bringing more and more capital into climate tech in Australia.
Yeah, I agree. I think it's incredible timing. It's thinking it's next week. I think it's the fourth birthday of Climate Salad. I'm thinking that newsletter I started, and we chatted with you at CFC, and that whole time frame. I think we're not there yet, right? Like
No,
but we
long way to
are.
go.
But we're somewhere, I think, which is
Yes.
really good. Like the big ones for me is the policies definitely go in this direction. The capital's coming in, which I think a lot of people have talked about doing things in this space, but I think you've done one of the biggest leaps and been able to pull in that capital, as you said. And I think to the credit of the founders as well, the technology is getting better and better. So hopefully we've got this wonderful crescendo of problem capital and companies getting ready to really take it and go forward. Obviously, there's a whole lot of companies and there's a whole lot of different ways you can invest. Can you tell us about what does a first good investment mean for you in terms of like size and timing, and also how do you get involved? Well, tell us about the process. Let's focus on the process first.
Yeah, sure. So I guess maybe from a process perspective, so we are based out of the greenhouse in Sydney. We also have so for half of the team's out of the greenhouse in Sydney, the other half is co-located with the CFC in Melbourne. So I think the first thing's very much, and we also have a website and kind of taking cold pictures as well. But I think if at all possible, kind of reaching out to one of the team members and making sure that you actually, and get in front of someone and really, working on that elevator pitch and really talking to one of the team members is the best way in, I think, because we do see hundreds of pitches a year. And we are a relatively analytical, quite deliberate investor. Not everyone is. Everyone has different approaches, and it's really good to understand that. I think when you're thinking about who are the right partners for your business, understanding how different investors approach things is really helpful. But we would maybe make, in a good year, we might make 5 new investments. We're not making 25, which some investors are. So it's kind of good. So and we're quite analytical around it. We are investing into hardware and software, solving real problems. And so we do a fair bit of deep tech investing. And so we really want to spend some time really understanding, what is really unique about this technology. What is the problem that it solves? Is it a problem? And this is a challenge that we have in climate a lot. But is this a really unique approach, whether it's technology or business model? And is someone prepared to pay to solve that problem? And is it a burning platform for them? So there's some of the things that we're thinking about. I think that from a process perspective, when you finding someone to talk to and getting in front of one of the team members, we'll always try and take that meeting. I think if we've got enough in from a pitch, right? So sometimes we have kind of cold inbound and it just doesn't seem like there's enough in that pitch, but I would keep kind of pushing for feedback on that. And then that hard part is kind of, how do you gain the attention of the person that you're talking to, given that everyone's juggling so many other things. And I think we also we're looking into technologies that solve a really big problem that can scale, can ultimately generate returns that our investors want to see. And so they'll keep investing into this space. And that it is really unique. And that doesn't necessarily mean intellectual property. It's like, how are you going to build a brand, a broader moat around what you are doing. And then I always put team at the end, but it's actually the most important thing. But I find it easier to talk about, is it a big market? Is it a unique technology? Can you generate a return doing this? But ultimately it comes down to then, is this team doing their life's work? Are they pushing as hard as they possibly can to solve this problem? Are they also really open to feedback? So there, I guess, just some of the things. So that first part of the process, I think, of kind of really getting someone to really engage with the opportunity, that can be the hardest. So I think kind of I'd encourage you to be persistent there. But then once we go through that, once we're kind of really engaged on a particular pitch and a particular investment opportunity, then you'll meet with a couple of the team members multiple times to really work that up. You'd meet with the whole team, And then we're actually, relatively straightforward. We have an investment committee where the partners of the fund are half of that investment committee. The other half, so 3 partners, the other half are people we've worked with for a really long time who we think bring a lot of value. And we make decisions by simple majority. So as soon as once you've gone through, we'll go through that, pitching to individuals, pitching to the team, really trying to understand the technology, understand the problem that is solved. We want to talk to a lot of people. We've been investing in this space for a little while, but it's so broad. There are so many. We're not pretending to be experts in all of these areas. So we'll talk to a lot of different people, customers, suppliers, other people operating in the market, and then we'll really once we've built that conviction, then pushing it through to investment committee and documentation. So lots of information in there, but this can actually take anything from 2 months all up, go to woe, to multiple years, because we just follow each other and we realise we try and very quickly say, you know what, this isn't right for us. This is what we would need to see. Here are some other people to talk to, and try and keep that relationship going. And there are a lot of examples where we have said, not right for us right now, but we'll follow it and then we invest later. So I hope that's helpful.
Yeah,
but
that's
happy to
good.
answer lots of questions.
Yeah, please, team, add in some more questions. Just one for me around timing. I think that's a key one as well. I think it's Virescent Ventures, but the pathway in and eventually each company finds one champion internally. Can that be an associate or a partner? And then that partner becomes a champion. You could build a relationship with, build a case up,
Exactly.
and then they take it to the investment committee and say, "Hey, here's a company I believe we should invest in, and here's why." And then there's the challenging to make sure that it's obviously a strong right investment. But that's great. It's finding that an individual who really believes in it.
Yeah, absolutely. Yeah. So we'll always have at least two people on any investment that we look at. But yes, throughout the team, different people bring in opportunities all the time. We always try and bring one of the more experienced team members in really early. Like if we think, okay, this could, let's get a partner to be involved in it, or director. But yes, it will. So you'll always have a couple of people really championing an investment.
Okay, well, that's good to know. And another one for me, obviously you really want to reduce emissions, and some of the companies talked about their big value in terms of emissions. This is a typical one, but are you like emissions first, returns are a bonus, or is it returns and emissions are a bonus? Like how do you balance those two?
It is a great question, Mick. Like again, it's a question we get asked all the time. We approach it so we will not do something if we can't see a big emissions reduction opportunity or a big impact on climate resilience. But beyond that, we are looking at, is this the best possible deal that we can do for our investors? We know we still operate within an incredibly risky asset class, which is venture, and institutional investors are relatively newly returning to invest into climate VC, and we're incredibly focused on, well, this is where we need to play, to make sure that we are doing the right, we're doing the right thing with our investors' capital, and we're going to generate the right level of returns to them. And that will include things like, well, how do we really like this? We can't get it to stack up straight away. What about Arena? Like, how can we work with Arena on that, or how can we work with other grant-giving organisations? So we will do that, but what we're really looking for is businesses where you really don't have to give up one or the other. So you can actually, we want to see that emissions reduction and returns are very closely tied, and so that by maximising returns, we maximise emissions reduction. But it's a great question, and it's always a really hard one.
It is, and I think that my view is that there has been times when there's certainly a massive trade-off there, where 25 years ago, investing in wilderness and biodiversity and other things, and even now biodiversity and adaptation resilience, I think those things are still ahead of the market. And not just in that, I think importantly, it doesn't mean they're not important. I think there's just that when the Venn diagram nicely overlaps enough between the problem, the environment, and the solution being a business, I think that's better. I don't think we're going to get to a nature positive world purely on the back of philanthropy. We might need a lot of policy support and consumer behaviour change, but we need sustainable businesses, not ones that are there for charity purposes.
Yeah, I totally agree, and I think that there are parts, and we are in a we're in a reasonably good place, Australia, in terms of where we have been over a number of years in terms of being able to access other forms of capital if it's not commercially ready. But that is not where venture needs to go. We need to see that part of venture is, this is we really kind of constantly sit there and go, okay, massive problem. Yes, this is a really burning platform. Who's got that burning problem? And so sometimes it can be not enough that we can see, oh, look, sometime in the medium term, this will be a problem. Let's say, but why now? Because we do have these funds that are closed end, and 10 years sounds like a long time, and it's not at all. I think it can go when you're investing into deep tech and you're looking at things that can really move systems. We have to spend a lot of time on that. Why now? What is that burning platform?
Yeah, that's great. I think that's really handy to know. To dig in a little bit on the process, just one last question around timing. You mentioned 2 months to maybe let's say 2 years, and I think roughly I'm finding at the moment that it's 12 to 14 months at least, the relationship. I think there's a distinction between and this is the thing, it's hard for founders. They're working very hard doing 100 things.
Yeah.
And people like me come and go, why don't you just spend lots of time building relationships with investors? And it's like, sure, Mick, with all my spare time, I'll just go and do that. But tell us about that. Do you want a founder to be like, hey, yep, we are ready to raise right now. We're 2 months away. Here's exactly what we're going to raise. Here's our term sheet and a data room. Or is it normally actually, hey, we're building a big business, can we get to know each other over a longer period?
I think it's always good to do the latter. I think it's good to be doing it over a long period because you just don't know what else anyone has on, right? Like we found this in our own capital raising. We were pushing and we were waiting for people to respond, but they're looking at 100 other things. Even people who invested in us ultimately. So I think starting those conversations really early on, it just creates, there are certain areas that we know really well, and there are certain areas we really don't know well, and it takes us a while to get up to speed. It's just also, I think that one of the most powerful things you can do as a founder is to start building those relationships, and you will get lots of no's from people that might ultimately say yes. And if you can handle those in a really professional, and most people do, really professional way and go, right, okay, I'd just like to learn. Could you just tell me a bit more about that? Fantastic. Okay. And then I leave I had an email from someone today saying, well, we're going to prove you wrong and we'll keep in touch in a really friendly way. Like I think that could be in an unfriendly way, but I'm like, fantastic. I've jotted down to reach out to him again in 6 months' time, see how things are going, so I would really encourage, start early, have lots of conversations. And one of the most powerful things, I think, for when we look at an investment, we look at a team, we look at a company, is someone who said, I was going to do this and they did it. I think that's part of what we're trying to form a judgment on when we make an investment. And if we've seen it because we've been talking for a while, then that's just, it really strengthens that case.
Just on that, a small one, I get some founders, which could be interesting. Are you okay through that process if it's over a period of time for them to tell you when things went wrong?
Oh, absolutely. I think it's actually really, really important because I think there's, the one thing that we know is that things are going to go wrong. I think so it's an interesting one. I think when people pitch to us, the one thing we know won't happen is what's in that pitch deck. It will either go better or worse, and it will probably go quite a lot worse in some ways, and hopefully much better in a couple of others. So I think it's, a big part of what we're looking for as well is how are people going to react in that? How are they going to, and I think really great founders that I've worked with are those who who are really transparent and really open and say, oh, I got that wrong. This is what I've learned out of it. And I'm not going to dwell on it, but I've learned it and I'm going to move on. And another kind of element of that, I think, is when founders who take a lot of advice from a lot of different people, really, really open to the advice, but don't take it all on. Like, I think again, we're not looking for people who will just go, oh, yes, that's great, fantastic, everything that you say. But what we are looking for is people that listen and carefully process what people are telling them and then chart their own path. So that's something that we look for a lot. And again, it's easier to see when you're doing that over time and you've had lots of interactions with people. So I'd really encourage people to be really open with what they've learnt and mistakes.
Yeah, it's a good one. There's certainly, I think I've been a founder in the past who had been just responsive to the last person I spoke to. It was like, well, I spoke to Kristin this morning and she told me I should definitely go to Asia. And that's what I'm doing now until I speak to the next person.
Yep.
So, yeah, listening and processing and making your own choices is part of the hard challenge.
Yeah.
You mentioned about your venture backable and mid goals. If somebody comes to you with just a great business that's got really clear potential, they need 5 million and they're going to be $100 million business, and they can earn all of it. Like, can you tell me about in terms of like a great business but that may not be venture backable?
Yeah, no, I think it's I mean, I think that there are lots in the space that I think that when you take venture money, there's a clock. It starts ticking, and that may not be right. I think it's also like, you sit back and you go, well, do I want to be a public company or do I want to be a private company? And as a public company, it's very visible when you make mistakes and when you learn. It can be terrible. It can ruin your business. So it's a bit similar to kind of when you sit back and you look at, okay, so am I ready? Am I ready for that clock to start ticking? And for people to go, okay, ultimately, like we have to get out, and that's how the whole model works. So if you're thinking that you really you're not ready to start thinking about that or start having that conversation, then maybe it's not the right time for you. I mean, obviously, we're not, it's very patient over that kind of a number of years, but ultimately, that's what you're signing up for, and I think that's where I think that can be tricky. I think that, so understanding and also understanding that it does mean, venture funds speak for our institutional capital, and we have requirements around that and we ask questions around it, and hopefully done really well. When it works really well, I think it makes a much better business. But I think you also need to think about, well, who is it and are they the right fit for my business? And so I'm not sure I'm actually directly answering your question, Nick, but just kind of talking around it. Yeah, but it's a scalability point. I think I've seen a lot too that are, really good businesses that can grow at a moderate pace, but can never grow at the pace or never be big enough or they're in too much of a niche to generate the returns that venture needs to see, because, we need to generate 10x on some because we're going to lose all our money on others. Like, that's basically how we think about it from a venture perspective.
That is a really good, the double actually of pace and size, right? So I think it's like if there's been a lot of great businesses in Australia that have grown very slowly into $100 million businesses over a 10-year period, and the founders might own 80% of it, and that's or 100% of it. That's fantastic, but not venture backable. And then there's companies that can go very quickly to 25 million. All they need is a couple million. But they're also not venture backable. And I think it's not an indictment on the business. It's just saying that, it's really, venture capital represents a tiny fraction of the entire capital markets and different ways to fund a business. I think it gets 95% of the attention, and it's actually only 5%. But I think and not to say that Virescent can't solve all your problems, but I think it's not going to solve everyone's problems. And I think, especially with climate tech, you've got this combination of hardware and software, because obviously there's a lot of capital in Australia looking for software. And I think the fact that you, Main Sequence, the Melt, we're getting more and more companies that are comfortable, like genuinely comfortable doing hardware, not just saying they are. I think that is key. And the other big one around that is, I think, Australia versus global. So one thing we often find is, I'm working really hard. I've got a couple of customers in Australia. Maybe I'm heading towards $1 million in Australia. I've got no international validation. Like, how do you think about, I've got $1 billion global opportunity, but I've actually only got Australian validation. Are you comfortable coming in and helping them making that leap international? Do you expect them to make it first? Like, what helps you value that global opportunity?
Yeah, I mean, most of the companies we invest into have a global opportunity, and generally, I mean, that's, you know, most Australian companies to achieve venture scalable returns are not, won't do that in Australia. Not all, like, so there will be a few, but generally it needs to be a global opportunity, and we are generally investing anyway to go, well, is this the best? Why can this compete on a global scale? But we don't need to see, I mean, we do some pre-revenue, we do quite a bit of pre-revenue investing. We do some post-revenue investing, and so we don't need to see that that the company has made that leap themselves. Ideally, we will look like, so we will always come in with a hypothesis around it, and we'd love to, you know, really test that and say, look, this is how we see it kind of playing out. And then we'd want to try and help, right? Like, so we think that we can add the most value if Australia is a relevant part of the journey, and or it is very much within where we invest. So the first investment out of Fund 2, Quetta, New Zealand investment, but it's at the intersection of, you know, it's a fast charging business that can also provide services into the grid. So it's right at that intersection of grid and transportation, and that's an area we know a lot about. Well connected into, and really kind of into our sweet spot, and they were coming from New Zealand to Australia. So that's kind of just gives you a little bit of a sense of going, right, that is a business we really want to be involved in. But how much is Australia going to be important to them versus Europe, where they're crying out for solutions to grid congestion? You know, we are very much focused in that case on what's best for the business. So long way of saying, like, we need to see there's an application. And we'd love to talk about like how best to achieve that. And we're big fans of co-investing with offshore investors as well. I think that can be a really smart way of trying to get, making sure, of finding partners that can help you grow into those markets as well.
Julian's asked that question about leading. Can you talk about like, leading versus coming into a group round, and also your view on co-investing with strategics?
Yeah, so we do tend to lead, but we don't always lead. So we have a slight preference to lead, particularly if it's in a space we know well, we have a slight preference to lead. But we're comfortable doing both. If we think it's a really valuable syndicate, we will join that. Where we, in terms of strategics, I think it can be, I think you always need to be careful about how they come in, but I think there's a really valuable role for them. So I think it's thinking about like, how big are they? What impact what information are they going to, I mean, there's none of this is, I'm sure everyone's had to face this, you know, how much are they going to see of my business, and how's that going to impact my negotiations with them? Are other strategics going to want to partner with me if I'm partnered with them? So there are a lot of things to carefully manage, but there's no doubt in this space, I think that they can add a lot of value. And so I think it is really thinking about, and we try and form, you know, good relationships with various strategics, because I think it's really testing out, you know, what do I get for this? Is it their corporate venture capital arm? Are they really closely integrated with the business? Are they incentivized to help me grow into the business? So really teasing that out. But yes, we certainly co-invest with strategics.
Interesting. Thank you. And if the strategics are customers, you touched on a really interesting point there. Like, sometimes it's like, wow, this product's so amazing, I'd love to invest. Feels like it can be good and bad. Can you talk about the pros and cons of that versus just a purely strategic investor versus, again, a financial investor only? Like, they're quite different.
Yeah. Look, I think I've seen it done really well, where first customers can really lean in and help. And obviously you just need to really carefully manage rights around that, like information rights, any kind of protection rights, and keep them relatively small. So I think, you know, so personal, I think it's always, you've got to think through why are they doing it? Ideally, it's not just, so ideally it can be a really good sign for financial investors to say, oh, this customer loves it so much they want to put some money in. But on the flip side, as I was saying, just thinking really carefully, they don't have any, you can still sell to whoever you want, can't you? And that's both the product and the business. Are they going to see all of your financials? You can set it so it's really rolled up. So I think at the end of the day, like there's all that kind of tactical stuff. At the end of the day, I think it's sitting down and going and thinking, what does this get me? Like if I've got a really complex product and I really want to lean into a first customer to really help me get this right, and they want to put some money in and do that, well, I think that's pretty interesting. If it was, actually they're one of many customers, and actually I'm really starting to nail this, I think that's probably a little bit less so. So thinking just really clearly about that.
Yeah, got it. And two quick ones maybe for Dan. Well, the first one is how old is Fund 2? And second one is check size ranges. Tell us about that.
Yeah, sure. So we're about 10 months into Fund 2. So still plenty of time on that. So very much in that investment phase. We've just signed off on our third investment out of that fund. And then the check size, we generally write 3 to 5 million Aussie as an initial check size. We've written up to 10 as an initial check size, and we've written as small as 300. So we do have some, but that's generally in that kind of 3 to 5 million. And then we tend to follow on. So we've got a few positions in the portfolio that are well north of 30 now, but that's we tend to come in at Series A or seed, but again we've come in later and earlier.
And follow on, it just works like a credit card, right? They just need some more money. They just ask you and just throw it in. And how does that work if you're already an investor and pricing that? How does that help? And then we can move on to Luke's question about interactions after the investment.
Yeah. So we we very much look at it and think, is this panning out as we thought it would? Are we? And that's everything. So we will look at everything and go, when we look at follow-ons. So we will always reserve money for follow-ons when we make an investment, but we will always really look at, how are things performing. And I think and we always try and operate on a no surprises too. I think when you get to, and I think a lot of it, I mean, there are obviously always kind of, we do invest into deep tech, so there can occasionally be binary outcomes, right, where it did or it didn't work. I mean, that we haven't really had so much of that, and part of what we're trying to do is back founders that will come up against that and maybe pivot or work through. But obviously, there can be situations where it hasn't worked. But really, what I'd certainly encourage everyone to do it. Really keeping your investors up to date as you go through things, whether they're on the board or not, and so that you then, you go to open your next round already knowing who's going to invest and who's not. Did I answer your question?
Yeah, I think so. And in terms of, I think from Luke's question, being active in the business, you just send us the check in 10 years, or you ring them up 9 o'clock every morning.
Yeah. Well, we try and find the right balance. Do we always get that right? Probably not. But what we try to do, we often take board seats, and we will try really to work out what level. I mean, part of the challenge and fun of the role that you're constantly learning in is always working out, like, how much should I lean into this? I don't want to get in your way. So I think that we will never pretend that we know half as much about running your business or about your sector, or what we will try and do is provide another perspective, and go, okay, we're sitting across 38 investments in and around that space. What are we seeing? And some of the really useful things, I think, can be from a completely different sector and going, oh, but we saw a founder deal with something really similar, and here you go. And then we will try and, we like to make investments where we think we can add value. So where is that through, working closely with our contacts, often through the CFC. So, leveraging those contacts and introducing customers, that's a big part of what we do. Introducing potential investors, thinking through hiring, thinking through and making introductions into that as well. So what we will, we will. It's a long way, perhaps, of saying that we try to lean in before people think we need to. Try to keep a close eye on how things are going, but also not get in your way. I think where there's a lot going on and you don't need that. I think it's probably the sharpest way of saying it.
Yeah, got it. And
But we
Juka's
tend to
asking
be
about
relatively hands-on, I think, in terms of like if you put us in obviously
on the spectrum,
broader
yes.
ecosystem. Yeah.
Yeah, got it. Yeah, I think at that stage. Just curious about two things you raised, and see if you're able to share. Like, why do you like leading, and why do you want a board seat? Just to help people understand.
Yeah, we tend
Very
to.
simple.
Yeah, we tend to. So why do we like leading? I think we tend to have a really clear view on what we think terms should be, right? So we tend to then think we do a lot of work around that. It comes down to the analytical side. We've invested in a lot of businesses now in the space. We see a lot of businesses in the space. So we think, we think we know how things should be structured and priced. So that tends to be our preference. But then we'll do that work, and if somebody else is already leading it and we think fantastic, we always co-invest. And so if someone else is already doing that and we agree with it, then absolutely we'll follow. We tend to, again, it comes down to, we tend to like to work with companies where we think that we can add some value. And part of that, I've kind of touched on a whole lot of things, but another part of it is around, thinking through capital structures, right, going forward, and thinking, what do you need to look like to be bankable? How do you get to that? How do we help make that happen? And that tends to then lend itself to some representation at the board, to really do that.
Going forward, obviously the follow-on investments, and the fact that a lot of these hardware companies might need infrastructure, debt, blended finance of different kinds. Is that what you're talking about there? You'll help them, can help them structure that and think about it, and that's not mutually exclusive, right? Like, once you venture, you do you expect to have a blend of different finance as these deep tech companies grow?
So we would, absolutely expect that to be part of the funding journey. Some companies will just be venture and then self-sustaining, and others will need a whole lot of different forms of capital. So that's certainly something that we have spent a lot of time with our ex-colleagues at the CFC thinking that through and going, right, okay, how do we bridge that gap? How do we get there? So that's something we certainly focus on a lot.
Great. And between you and Arena and CFC, just to Juka's question about how do you work together, like if someone's got Arena some funding, are they done and you can't invest in them, and can you co-invest with CFC? How's all that relationship work?
Yeah, so we're able to do all of the above, tick all of the above, and so we that the first fund that we manage, Arena's on that IC, so Darren and Zoe sit on the IC, so know our portfolio really, really well, and yeah, we absolutely work with our company. We think they're fantastic participants in the sector, right? So play such a critical role. And so we would know a lot of our companies are really have Arena money as well. And yes, we can co-invest with the CFC as well. Obviously, they have an interest through our fund, but it doesn't stop them from also looking at that. I mean, they sit on our board and on our IC, so they know what we're doing, and they're really interested in our opinion in terms of how they're kind of from an early stage investing. We largely do that early stage investing piece, but yes, it's we can co-invest.
Got it. Dan's also asked about flexibility on priced rounds versus safe notes. Any thoughts?
Yeah, we tend to prefer to price on the way in. We have done safes on the way in, but we tend to prefer to price because we feel like that's the time to have a discussion around where you think things are at. But there are sometimes legitimate reasons you can't do that, but it's just tended to be our preference.
Got it. And what areas are you excited about going forward? Like, what would you love to see more pictures on?
Yeah, great question. I mean, we're very broad in terms of where we invest. We've spent almost half of our capital to date has gone into energy transition, and I don't think that's going to change. And I know there are some energy plays obviously on the call here, but it's certainly, I think that is certainly a space that we'll continue to invest pretty heavily into. And obviously, you know, from a kind of and that's both from a deep tech and a business model innovation with the you know, the real kind of push into batteries at the moment. So it's certainly an area that we're really interested in from a few different plays. And then also, look, I think, you know, very broad. I think, you know, we're seeing some interesting stuff in some of the harder to decarbonise transportation spaces. Real breadth of stuff, real breadth of opportunities. Well, I mean, we're also seeing some, we are seeing some interesting plays with a carbon capture element. Which is always, it's an interesting one because it's a bit of a counter-cyclical play with the US doing what it's doing, but we're seeing some interesting opportunities in that space as well.
What about AI? You like every company should be thinking about AI, bullish, bearish?
I think that you can't not think about it. I think it's a really key part of, you know, I think would we make a pure AI investment? Probably not. We have looked at, I never say never, but in terms of where you're using AI in a way to solve an underlying problem, which is mostly where we see people doing it. I think we've seen kind of AI almost discovery platforms that would be on the kind of more of the pure AI space. But I think it's really smart, right? Like to embed it into your business. How do you move faster? How do you generate faster insights and basically get your product into market faster? Well, you know, we're looking at what tools we should use as a business. I think every business needs to. But we're not making so many like pure AI bets.
Yeah, got it. Big trends coming up. Anything you think is going to be important for these founders to sort of think about as this industry matures over the next year or two?
I do think that you know, I think that we are in a slightly unusual environment where you've got such a big country like the US that has really pulled away from climate. So I think that, pulled away from climate as it's, you know, they're still doing a lot around, you know, energy efficiency and, you know, and grid resilience. But I think it is really, and I think Australia has traditionally looked quite a lot to the US as that kind of next stage of growth. So I certainly think, I mean, not saying anything new, thinking about, you know, where are those, there's still plenty of places in the world that are really kind of pushing very hard on reducing emissions. So I think it's really just thinking about where your customer base should be. And a number of our portfolio companies have completely pivoted in terms of still finding really good customers, but they've just moved to a different region of the world. And so I think just being really clear on that. And I think that we are just in a market, and this is very cyclical across venture. We're in a market where traction matters, where unit economics matter. And so I think just really thinking about that when you're, and I think we have found, like, over the last, you know, having invested in it for about 7 years, there was a period there in kind of 2021, 2022, where there was such a heavy lean on the impact, which is obviously so important. But I guess we take that as a given, right? Like, that's why we're investing in the space. That's why so many people are starting businesses in the space. I think so. I would just encourage, I think, when you're putting forward your pitch, thinking about that kind of, but what's the core economic driver of what I'm doing? How do I help my customers solve a burning platform and help them make money? How do we make money? So I think it's just not spending as much time on the impact side of it, but just, you know, obviously it's important, but really kind of being laser focused on those core kind of milestones, unit economics, the like.
Yeah, I think that's absolutely critical. I think it's I think you've got to understand the emission side because that's the trend you're buying into. I think it's like the the .com assumption of billions of people coming on the internet and then mobile. What's actually when a billion people are using their phones for transacting? What does that do? We're basically saying these energy transitions are going to absolutely happen. How do you build into that? But it's happening in front of our eyes. We can't just you purely being a catalyst is not enough reason to start a business. I think that's really key. Last one from me. Do you think we're going to get COP next year, and what impact do you think that'll have on Australia and the market?
I feel like I'm a little out of the loop on that one. I think that the last I'd heard was it was looking pretty good, but I must admit I haven't really followed it too closely.
I chatted
I
to
think
someone today, and Turkey hasn't given up fully yet. I think they're
okay.
still pushing, but it seems quite likely. I think, especially with the post-election result. But
Yeah.
I think likely, but not locked in yet. But I think it'll be
Okay.
good for Australia
You
in
know
climate
more.
tech.
You're closer to it than I am, Mick. Far closer. Yeah. So I mean, I think it is. I think it's great to have. I think that what we have found is in talking to international investors and talking to international corporates, Australia is already starting to make its mark as punching above its weight in this sector. And I think having something like COP here would just help to really raise the profile more broadly. So I think it would be really good. So fingers crossed.
Awesome. Well, Kristin, thanks so much for sharing. Great work on getting the fund up and going.
Thanks, Nick.
Spinning out a CFC and looking forward to the big announcement of your third investment. Hopefully, this one can be a Climate Salad member.
Yeah.
I mean, we love our New Zealand neighbours, but there's just a tiny bit of bias towards our Climate Salad members. But all good. Thank you very much for sharing. I really, really appreciate it.
Thank you, everyone, for your time. Thanks.